Well, hello, everybody. I'm so glad you're able to join us for this session today. I'm moderating Investing in Vermont's Economic Future panel. My name's Ann Galloway. I'm the founder and editor of VT Digger, and I'm very pleased that we have 4 great guests on our panel. Before we get started, I wanted to let you know that you can pose questions in the Q&A. And if you want to talk to one another, you can do that in the chat if you want to say hi to someone, or if you're having a technical problem, please go ahead and put a note in the chat. John Copans is kindly serving as our tech person today. And the live transcript is available. If you don't want that, you can turn that off by clicking on More in your Zoom settings. And I'm not sure if that's the same thing as closed captioning, but I'm going to talk about that as well, just in case it's not the same thing. You can turn that off as well if you don't need the closed captioning. So I want to let you know that we're going to be talking for about an hour, and then we'll have 15 minutes for questions at the end. And we're going to be talking about issues pertaining to the state's economy, what the challenges and opportunities are. We've got panelists here who are in the world of philanthropy and lending, and who really understand what's happening in the state's economy. So I'm going to stop for a second now and let folks introduce themselves. And Rob Miller, if you could start, and then we'll work around the circle. Rob, then Jean, then Will, then Dan. That would be great.
Great.
Introduce yourselves.
Yeah, thanks, Ann. My name is Rob Miller. I'm President and CEO of VSECU, statewide credit union here in Vermont, and have been in and out of various roles that have some role to play in sort of broad economic development and Vermont economy issues, including ages ago serving with the Vermont Department of Economic Development. But glad to be here and look forward to the conversation.
Good afternoon. Thank you for having me this afternoon. My name is Jean Girard. I'm with Vermont Federal Credit Union. I'm the president and CEO. And I also have been in the business area for a long time as both a CFO for the credit union and as a CPA for 25 years. So I've been in the Vermont community for a long time.
Hello, everyone. My name is Will Belongia. I'm the executive director of the Vermont Community Loan Fund, and we're a mission-driven, community-focused alternative lender here in Vermont, financing a variety of small business and affordable housing and nonprofits. And I've been here, grew up here in Vermont, and have been with the loan fund since the mid-90s.
Hey everybody, I'm Dan Smith. I'm President and CEO of the Vermont Community Foundation. Our mission is to bring people and resources together to make a difference in Vermont communities. We support communities with both grants and mission investments. So I'm excited to be a part of it. And I serve alongside Rob on the board of the Vermont Council on Rural Development. And I'm happy to be a part of this discussion about the future of Vermont.
Well, thank you all for joining us. I'll be asking a few questions, but largely we're just going to have a kind of free form discussion. So please jump in as ideas occur to you. This is a pretty broad question related to the proposition, but I'm wondering what steps you think the state needs to take to improve rural communities around the state.
I'd certainly start with broadband. Our workforce is mainly working from home at the moment, and we have seen where broadband has been a challenge for our employees, and will continue to be a challenge for any young employees coming to Vermont.
I would go ahead, Will.
Oh, I was gonna agree, and you know, I think that we struggle obviously economically with a kind of a stagnant workforce, and in fact, in the most recent, a declining workforce. And I think we do need to think about strategies of how we both retain our retain our workforce here in the state and draw new folks into the state. And so many of the propositions, but be it broadband and early care and learning or housing, so many of the propositions are a piece of how we do that.
And I would agree. I think, in part, the propositions are intended to offer a framework that gives us, a point of aspiration or some guidance or a strategy to think about the conditions that need to be in place for shifting the economic and social conditions of rural communities. The broader question, maybe it's front of mind because I was just managing a panel that was thinking about planning. I do think we struggle in this state for the lack of a long-term plan, for the lack of sort of an articulated structure that can guide decisions, public and private decisions around and allow us to make headway on the challenges that we know are out there. I mean, we've known our workforce and demographics are a challenge for 30 years, and we haven't really made headway over those 30 years. We know that rural communities took a decade to recover after the 2009 recession. How confident are we that we won't see a similar pace of recovery, if at all, for rural communities post this recession? I think broadband first and foremost, but there are a host of things that we need to be thinking about over a longer horizon than I think we're currently organized or we ask ourselves to think about right now in the state.
Yeah, and I would offer, in addition to what we do to address rural economies, I think how we do it actually is equally, if not more important. One of the challenges, and we talked about it before we started, was the challenge of scale, or in our case in Vermont, lack of scale, and how it sometimes becomes difficult to do things at even a sufficient scale to be viable. And one of the main ways to mitigate that challenge is through collaboration, through cooperation. We can call it public-private partnerships, but it's not just public-private, it's nonprofit. But how we come together to address those issues becomes equally important to what we actually do, because it's only through coming together to collaborate that we're actually able to mitigate and solve some of the scale problems that we have throughout the state. Because each one of us may be able to justify a smaller role in addressing a solution, and if we can piece those smaller roles together, we actually might be able to solve some of those challenges.
So to dive in a little deeper on that issue, to get back to Dan's point about structure, and that sort of dovetails what you were saying, Rob, about how we come together around issues. What are some practical steps that could be taken in that direction?
Yeah, I'll jump in. I mean, if I could, Anne, I think, so we at the Community Foundation, we raised a COVID response fund, and we made a commitment early on. We raised north of $10 million. We made a commitment early on that half of whatever we raised would be used to think about the long-term resilience of Vermont communities and begin to seed some economic recovery initiatives. So we looked at things like broadband. We looked at the increasing diversification and diversity of Vermont communities and how we position ourselves as welcoming communities that offer a sense of belonging. We talked about the food system. We talked about rural entrepreneurship. We talked about learning and transition, the disruptions in the educational system. But I think key to this panel and thinking about investing for the future is thinking about rural communities. We have to be really cautious, I think, about not letting ourselves, as we look out over the course of the next 30 years, we can learn from our past, but we need to be really sure we're not slaves to our past in terms of what our economies have looked like or have been. And the rural communities that are recovering quickly and have historically recovered quickly from big disruptions have been characterized by high levels of ethnic diversity. They've been characterized by proximity to outdoor recreation that is free and accessible, and they've been characterized by high levels of entrepreneurship. So when the state or the state and private partners think together over the long term about what Vermont needs to look like, or what we need to be in place, we need to be thinking about how we see in places where high need exists and where energy and where momentum can be generated by sort of collective action. We need to be thinking aggressively about how to seed entrepreneurship, how to support an increasingly diverse population, and how to offer the kind of amenity, the kind of things that will inspire people to be a part of our communities and shift those demographic tides over time.
And
I would add, Dan, I think you're right on, and I think we need to find ways to support entrepreneurs in their risk-taking behavior, right? There are folks in Vermont that are willing and interested and able to take risks in business development, and we need to find ways and supports and create those supports in our rural communities that can support that risk taking behavior and support those entrepreneurs to do that.
sort of coming from a very small community and growing up in Vermont in a very small community, part of that is part of the challenge is some of that risk taking is at a very low investment level. In other words, they're looking for just something to help them get by enough to be able to do to create the initial project or to create. And I don't think that the information is flowing down into the states and into the towns to be able to support that. I think more information needs to be generated for those small towns to be able to give people direction.
I would agree. I think there's a really big gap in terms of the technical support and and capacity building among the entrepreneurial folks who might be inclined to start a small business or be entrepreneurial in their communities. And that's highly variable based on where you are in the state in terms of your ability to access those kinds of supports and the systems and structures that can help you take that first entrepreneurial or risky step. The other thing we were talking a bit about before we came on was just where the very real need to be able to provide benefits and support a family, right? In the food and farm space, the number of farm-based enterprises that at least that I'm familiar with, where at least one of the family members or one partner is working off the land, engaged as a teacher, is working for the state, working for an enterprise that offers and so providing benefits in a way of creating the risk tolerance on the part of the other partner to support the enterprise. So some thinking about how we know how we support families with things like early childhood care and education, so that families can afford to pursue the dream or the idea they have. Because there's no region, place, municipality that has a monopoly on good ideas that are ultimately marketable and could drive the kind of enterprise energy and economic energy to support families in towns.
I would also say that we need to be aspirational, but also specific in terms of what we want to accomplish and by when. And I'll use energy as an example in Vermont. We've been pretty specific about what we want to accomplish. 90% renewable by the year 2050, and we have goals that help us get there. And I'm thinking of another organization I'm involved with, Energy Action Network. Every year produces a document that basically not only outlines where we're at in the various areas that affect that goal, but offers different solutions and ideas and what it takes to actually get there. I think that brings enormous information that we can all then rally around and try to get around. And that comes from the comprehensive energy plan. So I think the state has a role to sort of set out what the future should look like, but has to be somewhat specific, both in terms of what it looks like and how you measure it and by when. And then it's simply kind of holding ourselves accountable to work together to try to get there. And all these things, we can talk about the cost, but we should also talk about the result and the benefit, not just the cost side there. In almost every case, there's a benefit associated if we're successful. And so, like anything else, it requires an investment up front that then produces a return down the road. And we should be thinking about both sides of that equation.
What are some other goals that the state should be setting, do you think, to help build the economy?
Oh, I tend to be fairly practical in my look at this. We have over 50% of our workforce is women, and having affordable childcare is very critical to be able to keep women in the workforce. And part of the workforce that was part of the number of people that became out of the workforce were women during the period of time of the pandemic because they can't find affordable health care. The other thing that my staff, who are the majority of whom is millennial, is finding housing, housing costs, finding housing, not being able to even have the housing inventory available has been a real challenge and will continue to be a challenge into the future. So those are some of the things I think that are really important. And I agree with Rob that we need to pick a few things and set some dates.
And so is the solution there, Jean, subsidizing housing and subsidizing childcare, or is it creating a stronger economy that enables employers to pay people more so that they can afford the housing and childcare they need?
I think the problem with housing is it's just not, the inventory just isn't there.
Yeah.
And hasn't been there for a long time. And we're finding that with our members who are trying to find housing also, who are trying to borrow and can't find housing. I think part of it is building a stronger economy. Part of it is subsidizing. I don't think that we're going to have quality childcare without some subsidizing.
I would agree with what both of the things that Jean just said. And I think subsidizing is an interesting word, Anne, for housing. I mean, because part of the way we subsidize it would be investing in the wastewater and sewer infrastructure so that it could be denser and more affordable, and we could actually supporting a plan that supported housing for home ownership. And I think that's the key. I actually think we've done a really good job in this state in terms of creating housing that's affordable and subsidized rental housing. But the big crux and what creates and drives part of our demographic challenge and part of our economic challenge for families is around that housing for home ownership. And so in terms of a measurable outcome, thinking about how we would, this is a challenging one politically because anybody who owns a home has a stake in scarcity, right? Our values go up when there's less housing out there. But the reality is we need to drop the median home value in Vermont so it's more on par with median income in Vermont if we want those millennials who work in Jean's shop to be able to afford a home on the salaries for the millennials in my shop. And so, figuring out how we get a handle on the kind of dense, affordable housing for home ownership so that young families and young professionals can begin to build the kind of nest egg and equity that allows for the economic security over time and between generations. What's interesting to me is that with the racial and ethnic awakening that's going on nationally, is we now know that the barriers that have been created to purchasing a home are part of the mechanism that drives intergenerational inequality. And that, and I think Vermont, if we look at our median home value and the median cost of owning a home, I think we have to wrestle with how we create more housing, for home ownership. Let's Grow Kids on the childcare side. Let's Grow Kids did a survey before the pandemic that there were close to 2,000 people who would be in the workforce tomorrow if they had access to childcare. Right, the Vermont Futures Project called out 10,000 workers that were needed, 2,000, available if we had access to childcare. So, unlocking economic potential by giving people some some of those essential supports. I don't think of it as subsidizing versus creating the strong economy, because I think the structures that will, support middle class, working and middle class Vermonters actually will unleash that economy. There was one chat that I want to dive into because Ken Ling's on the call. He's done some really creative thinking around community capital and community reinvestment. The other ways in which we address the sort of chronic inequality, both by race and economically, is create not just housing for home ownership and ownership of an ownership stake in a home, but thinking about small business ownership, thinking about entrepreneurship, and thinking about how you own a piece of something that has a chance to grow over time. And the accredited, I don't have an answer to the question about how you address the accredited investor rules for investing, which limit your ability to make an investment, but to people who have enough money to be able to risk it. But it does create a barrier for local investing that is worth addressing, both for the good of communities in terms of good ideas that are looking for capital, but also from the perspective of giving people a way of owning a stake in something in their community that has the potential to grow over time. So I think that's a really important point that Ken made.
It's interesting. When I've been working at the loan fund and looking at what we finance, and one of our big areas and sectors that we finance is in affordable housing development. And back in the 90s and early 2000s, we did a fair bit of financing of affordable single family and condominium homes for sale, single family. The nonprofit affordable housing developers kind of network in the state were doing and developing pretty interesting models of home ownership that could provide that first home for lower income, lower wealth Vermonters. The housing crash in 2008 pretty much put a stop to it for a good handful of years, and it really has not come back at the same level in the development of home ownership opportunities. It really was just starting to get back and kick back up over the last year or so, and then COVID hit, and it all got on the back burner. We may be able to see more of it, but boy, the price of housing and the explosion of demand for housing, coupled with the increase in materials and labor costs to build, to renovate, to build new housing, is really putting housing out of the reach of so many right now. Even rents right now on the unsubsidized rents right now have risen up quite dramatically. And I don't know how much of that is the short-term rental market driving that as well in certain communities, but that's had an impact as well on our ability to provide, as Dan talked about. Home ownership has been the wealth creator for many generations of families, and we can get into how it was done and systematically denied that ability to so many people, but it has been that tool, and we're losing that tool here in Vermont.
So do you think that's driving more inequality in the state?
Yes.
Already that it will?
Yes, it is. It always has. It has, and it will continue unless we, in some ways, unless we do something dramatic about it. And that all comes down then to the ability for us to recruit and bring a diverse workforce into Vermont, to retain our current folks that are in Vermont, retain them here to fuel our economic development. Housing is going to push a lot of people, especially housing, as I think Dan said, housing in relation to average wage is going to continue to deny people from coming or restrict them from coming here and push people away from Vermont.
I'm thinking about this conversation around local capital and investing in local businesses, and And I see a comment in the chat from Charlie Kimball that we do have a Main Street investor classification that does allow non-accredited investors to invest in local businesses, which is true. One of the most powerful tools that we have as a state is our own consumer behavior, and it's where we choose to put our dollars. And as opposed to buying that item, and I don't mean to bash a specific company because that's not the point. As opposed to buying that item on Amazon, taking the 10-minute drive down to the hardware store, it may not be quite as convenient for you, but it has a much more and deeper impact than it would otherwise when you're shipping that dollar outside of the state of Vermont. And the consumerism, and that could also be, investing in local businesses. There is a company that both Dan and I were involved with called Milk Money. It's still around. Milk Money was set up essentially to bring together everyday people that may not be accredited investors with their local businesses to support their growth with as little investment as $200, $250. It continues to be there, but it's not gotten the attention from individual participants as perhaps we would have hoped. Industries, we can make change simply by where we choose to put our dollars, and that's probably the most powerful tool we have.
Yeah, I think.
Sorry.
Well, I would just say with Rob makes a great point, and to Charlie's point, about the Main Street investor, opportunity in Vermont. Really, it's about creating and sustaining a platform long enough for people to understand that they have that as an option in terms of how to allocate, a piece of their investment capacity to the extent they're comfortable and how they want to do it, risk mitigated, as Ken observed, in ways into local enterprises, and also create an understanding around how they might do that, how they might do that effectively. So
there's a interesting question in the chat about working. Those of us that are alternative investors, and I think that while many might not think of Gene and I as alternative investors, we certainly see ourselves that way. Although Will's probably a little bit more alternative. But in any case, whether we've had experience working with municipal or nonprofit, and just a couple examples, actually, the Vermont Community Foundation and VSECU worked together at the beginning of the pandemic to essentially take deposits, mission deposits that the Community Foundation placed with VSECU, and use those as collateral for emergency loans, low doc, low, if close to no underwriting, small dollar loans to people who needed the money, and to either use those dollars as collateral for those loans, or even perhaps use those dollars to buy down the rate based on certain household incomes. So that program worked out quite well. We ended up, I think, making about $500,000 in loans that were, $1,000, $2,000 per loan. Not just on Community Foundation, but there were other foundations, as well as VSECU's own charitable dollars that supported that. We've also worked with the state of Vermont and Efficiency Vermont indirectly to help buy down rates for home energy efficiency based on household income, which has been extremely effective, even more so through the pandemic, given the amount of federal dollars that flowed in. So those are great opportunities and examples of collaboration, and there are a host of others, but collaboration requires not only intention, but it actually requires quite a bit of work, because everyone's got to kind of agree where each other can add the most value, and more importantly, what they're not going to do, because there's inevitably overlap, and people have to agree, to defer to someone else for something that they're better at.
So when you invest in energy programs, you're also really helping people save on energy bills over the long haul, Rob, and that's part of the investment.
Yeah, I think so. One of the keys to achieving our energy goals is to actually upgrade the energy efficiency of our housing stock. And what we try to do is finance it in a way that the savings you realize from making those upgrades is greater than or at least equal to the new loan payments you have to pay for those upgrades. So essentially, you're hopefully net neutral in the short run, and it's not costing you anymore. But yet, particularly for low income households, they may actually be able to heat their homes in the winter to quality of life levels that, whereas otherwise they weren't able to do that before. So not only are you providing them with better heating sources and you're solving an environmental problem with the energy efficiency, but you're actually providing better quality of life, and that leads to better health outcomes and all kinds of other things. And we can do that without any funding from the state, but we can go even deeper if there is support and investments from whether it's the state or philanthropic dollars to buy down those rates further for even lower income households, because they're more motivated to engage in that work, whereas otherwise they may not be.
I think Rob's got a great point, and I think the energy is an example, but and VSECU has done a few others. The Community Foundation has done some, VCLF. And I'm going to reiterate something Rob said, which is getting different financing partners to collaborate to address an issue, I think can be incredibly effective. We're a small state, and but we have some really good thinkers in the financial world who may have their own constraints, but when you combine them with another entity that has different constraints, but they're different, if you can combine them to create a product that can really make a difference, a financial product that can really make a difference in for households or a business. You know, we have a lot of examples of those. A lot of them become one-off, where one entity is doing it with a partner. And I think we still, even though we're small, sometimes we struggle to share that success with everyone of how that success happened, of how we created that partnership to address an issue, and how we can really help other entities partner to create success, whether it's energy efficiency and energy efficiency finance. You know, we have a great program with the state and the Working Lands Enterprise Board to provide financing for food, farm, and forest businesses that is low cost. And it's just this combination of whether it's community foundations, philanthropy, the Vermont Community Loan Fund's alternative lending, a bank or a credit union's more regulated capital, and then other partners. The state can come in, but those partnerships, as Rob said, take a lot of work to both create and maintain. And I think we need to talk about the success of how we created those kind of collaborations as a financial sector or an investment sector here in the state, so that others can replicate or at least get ideas on how they could create something similar in other areas.
Yeah, I think that's absolutely right, Will. And I'm thinking about, I'm thinking about the Putnam block in Bennington as a $53 million downtown revitalization project, that a number of different entities were in. We were invested at the Community Foundation out of our, Vermont place-based mission investment pool. We have an asset allocation to Vermont Investments, which allows us to take a small piece, but an important piece because it was a very risky piece, but in partnership with the Bank of Bennington and a number of other folks, like that project came together and has been a win in terms of people living in downtowns. To Ellen's point in the chat around infill development, there are actually people occupying, the upper floors of a building that was vacant since the 1970s. The interesting thing to me is thinking about, sort of community investment from the perspective of enterprise and then infrastructure. How we foster within Vermont communities, particularly those whose economic recovery has been halting at best from the last recession we were in. how we begin to think about how all of our investment activities complement each other in place to generate a sense of momentum. So to the extent we're underwriting the growth of small businesses, to the extent we're underwriting partnerships with Housing Vermont or other infill affordable housing projects, to the extent we're underwriting incubators, maker spaces, like, and not we, the VCF, but we collectively as funders and the funders who are on the webinar, how we think like in the aggregate as a sort of a team-based approach to generating momentum in places where momentum's been hard to come by for a couple of decades. I think that's where that partnership will, and I think that's where that gets really exciting from the perspective of the lived experience of those communities.
Are there some more concrete examples of partnerships that you all could talk about?
I'm off mute, so I'll keep going. I'm incredibly proud of the way some things have taken root in the town of Springfield in the last couple of years in terms of partnership. There's the Black River Innovation Campus, which is an accelerator. Springfield has a legacy of the last Recession and Recovery Act, has some of the fastest fiber in its downtown in terms of internet capacity in its downtown of most places in northern New England, and yet it's a high poverty and a tough economic circumstances community. So you've got the Black River Innovation Campus. You've got some really wonderful work with Housing Vermont in terms of the revitalization of some of those riverfront old industrial buildings and affordable housing. We've been both grant funding and investing. We helped underwrite the relocation of the co-op into the downtown into the People's United building in the downtown, and we've been grant funding computer science program in the local schools there. So along with a lot of other philanthropic and funding partners that there is I think there's a really inspiring sense of momentum in a place where that's been hard to come by for a little bit of time. So I think that's a great example from our perspective at the Community Foundation.
Jean, what are you seeing?
From our perspective, some of the relationships that we have are the usual supports for small business, SBA to support small business loans, VITA to help us support small business loans, the FHLB, who has given us the ability to make very low interest rate loans to small businesses. And we've been able to support women-owned businesses and businesses that were really lacking financing with those loans. So there are certainly support out there, and we'd be interested in certainly coordinating with anyone to assist the business community.
So are those microloans, Jean? How would you describe the scale of those loans? And could you talk about the range of businesses that you lend to?
Certainly, we lend to very small businesses, and we lend to a few large businesses, but the majority of our loans are small, under $50,000 for sure. We lend to hair salons, we lend to auto repair shops, we lend to, we have a horse farm, we lend to, evading me now, but huge numbers of small business restaurants, bakeries. The small businesses that you see on the street are the businesses that we mainly lend to.
And a really relevant recent example of partnership actually, comes from federal government in the form of the PPP loans, where they're essentially leveraging our origination and underwriting and servicing platform, but providing the capital that really at the time would have been difficult for us to step in and provide in the same way that they did, certainly at the same rates that they provided them. So that's another great example. And we should mention that we have an incredible opportunity right now, given the amount of resources and capital that the federal government is flowing into Vermont. lot of time and energy is being spent trying to figure that out. But some of the investments that we've talked about already can be seriously moved forward over the next several years because of that capital that's coming into Vermont.
And what do you think we should be investing that money in?
Well, honestly, I think the legislature and the governor has been doing a pretty good job of prioritizing. I don't have major issues with the way they prioritize it in terms of childcare. Many of the issues we've talked about already in terms of childcare, in terms of broadband development, in terms of energy efficiency. I think those, particularly those investments, when you're only getting one-time money, to use that money as a down payment for an investment that will yield results for years after that investment is made. And broadband's probably a fantastic example of that. So I think I really applaud the work of state government throughout this pandemic. But we've talked about collaboration between the executive and the legislative branches has also been terrific.
Yeah, I would agree with Rob on just to chime in. Some of the planned investments in affordable housing development and the creation of new housing, and the broadband investments. A lot of the kind of the one-time investments are really. I think there's an opportunity to really pivot a lot of the constraints, or not pivot. So pivot's the wrong word, but to overcome a lot of the constraints that we've talked about and that the proposition talks about that have really shackled the growth and development of rural economies in Vermont. And I think there's a lot of opportunity, and I applaud our public servants, our legislator, or the administration to really trying to think through it in ways that I think would address a lot of the propositions that we're talking about in this session.
So if broadband is number one, how transformative are the investments going to be, do you think? Is it going to enable more people to move here? I mean, we hear about real estate agents who say, folks don't want to move to certain communities around the state because they don't have broadband. Is it going to create more of an even playing field in communities across the state? Or how do you envision that change impacting local people here?
Well, I mean, I think that's and I'll just be, because I tend to agree with Will and Rob, but I will. My one apprehension is that we don't have a strong track record of stick-to-itiveness in terms of big problems that take time to fix. And so, my fear is that we were going to fix broadband in the last recession, right? My fear is that we're going to wake up in 2030 and still be wrestling with some of these endemic challenges, and have not really held ourselves to the objectives, and maybe we've let some of the orthodoxies that exist in Vermont sort of overwhelm our progress against some of these thornier issues, even with the financial resources that we have to bring to bear on them. So, and if that happens, you run the risk, or we run the risk as a state, of seeing how some of these investments then, or some of the conditions then accelerate the inequality, the inequality that we see by region, the structural inequality we see by income level, and the challenges around racial inequality as well. Because if they're simply, the barriers to equity over time are about owning, being economically secure, and access to economic security means owning a home and being able to own a piece and have a business or have a good job and build up some savings. I worry, I worry that people's confidence and faith in our systems and structures is going to wane if we're not able to make headway against these big challenges this time around.
And I think it will also, if we can get broadband, it will also enable us to support rural Vermont. Also, we found through the pandemic that remote work is highly successful. And I think that most businesses came to that conclusion. So being able to hire outside of the Burlington area, for example, for administrative staff, for accounting staff, for or any of those staff for sales staff. I mean, it makes a big difference. I think that we can certainly start to expand our employee base.
Agree with that.
And how do you think the remote work change is going to affect businesses? Do you think most businesses will be in a hybrid situation, coming into the office once or twice a week, or do you think people will be fully remote? How do you get your crystal ball out there, Jean, and tell us what it's going to look like?
I think it's going to be hybrid.
Yeah.
As you know, employers, we like to see faces. And I think that the staff miss us, but certainly there is going to be a very strong sector and a strong push for keeping staff employed remotely.
I would add to that. So the correct answer is I have absolutely no idea. But that said, this is an interesting area. I don't actually think businesses are going to get to decide. I think in this case, the workforce is going to decide because we've already proven that it can work. And so, you know, I'm already seeing some businesses kind of hedge. You know, they were all excited to kind of move to a work from home environment during the pandemic, and now that things look like they're loosening up, they're starting to kind of hedge on that a little bit. And they may find themselves having a more difficult time recruiting new employees or retaining existing employees in the future if they aren't more flexible. So I think we're moving from sort of for many of us, a less flexible or inflexible model to one that has more flexibility, and different employees will have different preferences, and different units within our businesses will have different needs. And so I think for us, we're not thinking of it as a firm-wide sort of, you know, everyone will be in at least 2 days a week. We're actually looking at it team by team, individual by individual, to see what works best for the team, for the business group, and ultimately that'll aggregate up to what works best for the business. But we're trying to really pursue the enhanced flexibility that provides us, because at the end of the day, it'll be good for employees and it'll be good for us as well.
So does that mean services will be more online too, Rob? Does it mean less kind of face-to-face interaction with customers at VSECU? Is it, I mean, everyone's already gone online to a certain extent, but do you think that this pandemic has pushed both customers and employees online?
So the short answer is yes. I think it's accelerated a trend that pre-existed COVID. It's probably accelerated that move from analog to digital by at least 2 to 5 years. Just the jump in activity, and people realizing that, oh wow, this isn't so bad. I can actually do my business. I can apply for a loan online, and kind of going into the branch is kind of a pain compared to this. I think we also learned some things. I think Jean would agree with me. You know, before the pandemic, you know, the notion of sort of setting appointments in the branch for meetings with our members, we just didn't do that. Everything was walk-in, and we had to change that out of necessity during the pandemic. And then what we heard from both our employees as well as our members is they really liked it. And of course, it makes sense in hindsight. Like, why didn't we do that before? Like, you know, we're more prepared for the member when they come in because we can do a little bit of research beforehand. They know when they come in that they're not going to have to wait. You get the better service all the way around. And so I think there are going to be things like that are going to stick. And we'll figure out how to make it even more efficient through online scheduling and stuff. So I think it's a little bit of both.
I'm a little worried, Rob. I'd be curious. I'm a little worried about the unintended consequences of a more and more remote financial system, more digital online financial system, and the potential of it being even more extractive of lower income, lower wealth communities and households, because it's easier when you are not linked to place. it is easier to discriminate about where and how you offer products and services and investments. And there's going to be profit incentives that are, logically could lead you to differentiate to the detriment of many rural communities. Not you, I'm sorry.
I was going to say, we're talking about you being ubiquitous.
The financial system, right? The financial system. We've seen that trend of a digital financial system and a pulling back of kind of that place-based bricks and mortar. And it's going to accelerate. And there are going to be large communities, swaths of our communities that I fear are going to lose access to that financial service.
Yeah, I don't think it's either or, it's and. And I think the nature of what medium people use for what is what's changing, right? So what we're finding is that for your more routine transactional activity, that's moving online, digital, whereas there's still a very strong desire to come in and talk to someone. But then when we think about, low income communities, for example, or people of color in communities, a lot of those communities actually already use digital services to a pretty large extent. And so, but yet they still require the face-to-face interaction. So it's not either or, it's both. And I would say the most important thing to serving those underserved and sometimes marginalized communities is intentionality. I think Eric has had a comment about what are the capital sources that can help prioritize racial equity. And I'm not going to say that there aren't capital sources, there are, but there could be more capital sources if we were just more intentional about learning what the barriers and look, Will, our organizations have worked together on this you think about the policies that drive loan underwriting, right, have essentially evolved. It's kind of like a house that you just keep add additions to over hundreds of years. And they're based on a history that predates all of us, right? But they become systematized, for a lack of a better way to look at it. So much so that we can't even. It's very difficult for us to even understand where they may not be as accessible as they need to be, or get used to a totally different kind of underwriting that isn't credit score based, or other mechanisms that inherently are exclusionary. And you got to have really strong intentionality about that, and be committed to trying to figure it out and pilot different ideas, because the first one you pilot isn't going to work more than likely. So you're going to have to learn from those mistakes. So Will's laughing because we've made more mistakes or I'm
hoping my first failure is small
enough not to put you out of business.
And so, Will, I'm going to add one more thing to that. Is what we found over time, and as we start expanding our services in different places, that really, to be really successful, and this is not for large entities like Chase, but for us to be really successful, we have to have a reasonable touchstone, which is a branch or an office of some kind, in order for those communities to be interested in who we are, especially in rural Vermont.
I do wonder, kind of related to that observation, Gene, we're in this moment, over the last 40 years where the ethos of a lot of, the financial sector and a lot of the business sector and a lot of the economics has been concentration and efficiency. And, whether it's venture capital focusing in the Bay Area, whether it's, finance in New York or whatever, but concentration and consolidation has been that a mechanism for stronger returns, and has been the structure and aspiration for most strategy in a lot of different sectors. And we've just been through a disruptive experience where, frankly, being distributed and disaggregated and being somewhat at a distance has actually been a factor in greater resilience, right? Whether it's public health or even or our food supply relative to the national food supply chain, or in other ways. And I don't wonder whether there's a bit of a benefit to be spun for Vermont communities and Vermont enterprises and Vermonters around the idea that being distributed and thinking about local investments and thinking about and being more patient and is an important hedge against the risks associated with concentration for financial enterprises and investments. And I have a hard time picturing like why I'm not a big venture fund is tolerating the real estate prices when in Palo Alto when they could be located in any one of the secondary or tertiary markets and have access to the same workforce digitally. So like it's going to be really interesting seeing how this disruption plays out in terms of where investments are sought and how people think about geography relative to the security of their investments over time.
What do you think about the current state of the economy? Do you think we're facing inflationary pressure at this juncture?
Yes, I think we are. I think we will be. The prediction of a 6% GDP means that there's going to be they expect a very quick recovery in certain areas. And I think there's going to be a lot of inflationary pressure. We've got a lot of money from the government that is funding both people and to a great extent businesses, PPP loans, et cetera. And I think there's going to be inflationary pressure.
Yeah, I think the real question is not whether there's going to be inflationary pressure, but whether it's permanent or not. Whether it's this kind of built up demand that is coming through in supply chains repairing themselves and such. But I think we're all experiencing some level of things costing more or taking longer, perhaps more likely. I think the question just becomes how long that lasts. So, the inevitable question being talked around in sort of banking and Fed policy circles of is it transitory or not? And no one really knows yet. So.
Yeah. I will say from a philanthropic perspective that, just in terms of the risk of extended inflation relative to the number of Vermonters who are no longer active in the workforce or, have been out of work, and the number of Vermonters who, haven't continued their education after high school in terms of developing the kind of knowledge-based skill set you can put online and participate economically. That's a pretty scary proposition in terms of what that will do to the lived experience of a lot of our communities. But yeah, I mean, I think it's coming. It's just a question of, is it a temporary blip, or is it a sustained inflationary thing?
And when you say temporary blip, you're talking about a few months or 6 months or a year?
I mean, I'm not an economist, but I mean, it would seem temporary to me if it was a year or two.
I'm writing it down, Dan. I'm writing down what you say.
I would take the over route. It would seem temporary if it was a year or two. In part because the Fed tries to manage to a particular inflation level, and they've been below it for a long time. So it would make sense for them to manage for it to be above that level for a little bit to get back to what they manage it to. But if it stays above it for too long, and frankly, we have to navigate the fact that we're a rounding error on most of the data sets the Fed is thinking about in terms of Vermont communities. So no matter what it means for national policy, like there are a lot of people in Vermont who are out of work or having trouble finding the jobs that pay them wages right now. And if inflation occurs, those dollars are going to go even have a shorter distance to stretch to begin with, or to end with. And so I just I think it's something that I trust the legislature and trust the legislature is thinking about, but also from the perspective again of thinking about public community investment and systemic investment, given all the resources that have come from the federal government, or the resources that have come by virtue of the market performance in the last few years, how we reinvest those in communities in terms of systems that set a better foundation for a more equitable economic activity going forward is going to be, it's really important that we think about that and then kind of hold ourselves to it.
We've got a comment from Eric DeLuca about your point, Rob, on inflation risk. And he says economists generally distinguish between particular things costing more, not inflation, and everything costing more in a way that becomes a reinforcing loop. The Fed is managing to allow inflation to overshoot 2% so that it averages that level over time. Thanks, Eric, for the economic lesson there. It does seem like we are seeing individual prices for certain items going up, cars, lumber, construction, but that doesn't necessarily indicate that everything is going up, right?
Well, and it's a complex system, right? So it's not all bad. When you have inflation, particularly if it means you're getting paid more, because it may require us to all raise our wages, although I think everyone on this call is paying livable wages, but it may require us to raise our wages in order to pull those people back into the labor market, and that's generally good, but that may also cost us to raise our prices. So the problem is you pull one lever and four others kind of get out of whack, and you just try to keep some equilibrium. And the Fed has a plan, and Eric's right. They're willing to overshoot 2%, but then there's a whole bunch of caveats around that as to whether they think that inflation is permanent or transitory. And you think about it, we've never been, in many of our lifetimes have not really been in a truly inflationary environment. And so there's not a lot of knowledge around how to manage that that's still around. So, the answer is who knows what happens in today's markets if that were to happen.
So can I jump in on a completely different tact?
Sure.
I think, from the perspective of the proposition and sort of laying a foundation for thinking about what Vermont, how Vermont evolves over the course of the next 10, 20, 30 years, right? And from a local investment standpoint, really local investment would be a mechanism for thinking about a more structured, a more structurally resilient economy for Vermonters. And one of the things that hasn't come up, maybe it has in the chat and hasn't, is this sort of the idea of the growth of employee ownership and alternative ownership structures for businesses. I'm worried right now we've got a generational transition of closely held and family-run businesses that's going to occur as boomers retire from the enterprises that they've run. And you think about what that might happen, what that might mean for local communities where there's a couple of employers that are employing 50 to 100 people, and the exposure that creates for those communities relative to what families will do with those businesses quite reasonably when they want to divest from them. And so I just raise it because it's something we're sort of thinking about from the foundation's perspective, and we talk with folks at the Employee Ownership Center and some other places, but I think, in the long term, again, thinking about this from a state perspective and a community perspective, how we create an environment where families and, partners and people can create enterprises that have the ability to grow over time, and what our role is in non-traditional and traditional forms of capital in terms of really seeding that. And making sure there's equitable access, because there's no monopoly on where a good idea comes from. Equitable access and creative access to capital is going to be really, really important. And I just say that because I think that's going to be the heart of the long-term economic resilience we see. So whether it's employee ownership in succession, whether it's community-oriented private equity, whether it's fostering that entrepreneurship. I'm beating the drum with the three other panelists, but when we get upstream on all the things that philanthropy is asked to address in terms of, the chronic challenges that exist in communities, the underlying economic prospect of the community are frequently preconditions for those challenges. And so, a general invitation to help us be creative in terms of how capital can go to work to address those economic circumstances.
Well, it seems like the succession planning issues are already coming up, at the end of COVID. We've seen a number of businesses either shift ownership or sell altogether. And, with Coffee Cup and Northshire Bookstore and Vermont Coffee Company, there have been a number of companies that have already changed hands or, have found a way to move forward or not in the case of Coffee Cup. So yeah, how does the state organize that, Dan? What's the best way forward in terms of, actually building some structure around that? Or, can the Commerce Agency be more proactive in helping companies that are looking for that next generation?
Yeah, I'm feeling a little bit like a broken record, but I think it does come back to us all sitting around the table and being united in how we want to approach something. And there are examples throughout the world where these kinds of businesses, whether they're cooperatives or employee-owned businesses, thrive. There's a region in Italy that is known throughout the world as a vibrant cooperative region. There's a region in Spain that's also known, and it's intentionality and intentionality and cooperation amongst all the players. Because at the end of the day, it isn't one source of capital, for example, that solves that problem. It's an integrated array of sources of capital, each one playing a different role that can really solve that problem in a more efficient way. And so that requires us all to work together to be united in what we're trying to accomplish. But it gets back to the theory earlier as well. It also is in our hands as consumers to support those businesses as well. We should think of it as trying to recirculate those dollars within the state as many times as we possibly can, and being very conscious about it, because it will create more opportunity for our residents, and it'll create more resilience, and that will allow us to sort of survive those peaks and valleys that may exist in the economy more broadly.
Well, we've got about 4 or 5 more minutes left, so I don't know if there's anything else you all want to talk about, if there are some questions here that we've seen in the Q&A or the chat that you want to address. Thank you for addressing some of those questions as we've gone along. But
I'll jump in. Just as a closing thought, I think we have one really, really good example, and I'm not just saying it because I think she's on the call, but a public-private long-term partnership that had articulated a strategy and then advanced that strategy through formal and informal networks in the Vermont Farm to Plate Strategic Plan. Right, we've increased the amount of food that we produce and consume locally to the economic benefit of those communities. We've got plenty more work to do, obviously in that space. But I think about this sort of the application of that level of diligence and that level of patience and that work around the ideas of entrepreneurship, around employee ownership, around some of the same sort of additional systemic challenges that we may face in changing momentum in communities. And I think that's a really bright spot. So maybe Ellen dropped off the call, but I think it's worth acknowledging. I mean, because I do rant about the lack of strategy sometimes that exists into short-term thinking, but there is a really abundant and robust example of where organizations, public and private, came together and pursued a shared and collective strategy over time.
And I think the same dynamic, maybe not to the same extent or just different, frankly, has existed in the renewable energy and energy efficiency space as well. So there are pockets, and each one's a little bit differently applied. I don't know that the energy space is quite as organized isn't the right word, but I don't know that it was quite as deliberate as farm to plate. But it's been arguably equally powerful in its impact, and it came through networks, right? networks of people working together. Those initiatives, I agree. Working landscapes is another one, maybe a little bit more earlier on, but has the opportunity to develop into that as well.
Well, this has been a great discussion. It's been fun to listen to you all and hear more about what you think about how we're doing as a state. And I hope that everyone who's here is going to come back tomorrow for day 2, right? I don't know, Dan and Rob, if you want to say anything about the rest of the conference. You're both on the board, right? Of VCR.
Sure. I do hope everybody comes back for day 2. I will admit that the hardest thing about the webinar format is not really, it's already hard to react and read the room in a Zoom call, and then you take everybody else off. So all we can see are the panelists. So, but the important thing that I think about the proposition is that it's the starting point for a set of conversations that really are. The hope is that by reflecting back what VCRD has heard over time about where Vermont is and what Vermonters hope and aspire for communities, that maybe we can build a sense of common cause around moving these things forward over time, and understanding that strategy and discipline and diligence over time is hard to adhere to in the kind of the civic environment that we live in, and so that maybe collectively by reflecting these, refining them, and holding them out there, we can build stronger communities. There's a lot more to come tomorrow in terms of information and insight to digest, and I hope people will stay engaged and, stay after. I'm not going to volunteer the other panelists, but stay after, me, if you have ideas that you think the Community Foundation or I should be processing or thinking about, there's no shortage of good work to be done, and look forward to hearing those ideas.
I'll keep that in mind, Dan. I got lots more ideas to talk to you about.
Well, I do. Rob, you've been a good partner.
Tomorrow's an interesting shift, though, right? 20 years ago, VCRD engaged in a similar effort to sort of define a future of Vermont, but as in many respects, it lacked sort of the implementation element to it. And tomorrow is really oriented around getting ideas, right? And advancing those ideas so that we can kind of collect them, organize, prioritize, so forth and so on. And so I think today was more exchanging information and sharing thoughts, and tomorrow is more, I think, action oriented.
I think that's right. So.
Well, great. Well, thank you all again, and enjoy the rest of the conference. John, have we made the
Nice work, team. Yeah. Thanks, everybody. And we'll hope to see many of you tomorrow for our more sort of participatory sessions, as Rob points out. So thanks, everybody.
Excellent. Thank you. Bye.
Thanks, Anne, for facilitating.
Bye, everyone.
Good to see you.
All softballs, just like you promised.